Good morning, traders, and happy Friday. It is the 12th of February 2016, 8:02 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Changing the format up a little bit. I'm not going to cover the news. You can look that up on your own. I will discuss the overall sentiment, though. The overall sentiment overnight is slightly more risk-seeking. Money is moving out of protective instruments like metals, the yen, treasuries, and back into higher risk instruments. Crude oil is up 5.8%. The DAX and the Euro stocks 1.7%. The S&P 500 up 1%. The Russell 1%. The S&P mid caps almost a percent, 0.91. Nasdaq 0.92, and so on and so forth. So the dollar is also stronger at 0.44, although the drop in gold is not reflecting the type of movement we've had in the last few days. It's near its lows. It's $5 from its lows of the session, but it's still pretty buoyant here, having traded up to $1,248 overnight. But the overall risk sentiment is to the side of being risk-seeking. In other words, putting money back into equities in the overnight session. Looking ahead today, the key drivers that we have remaining are University of Michigan sentiment at 9 Central, 10 Eastern. Consensus is 92.3, and then at the same time we have business inventories at 0.1%. Baker Hughes rig count at noon Central, 1 o'clock Eastern, and then we have Fed Speaker Dudley at 9 Central, 10 Eastern. Fed's Dudley is in a Q&A session. Let's switch gears and look at the markets. Really briefly, just a heads up, I will not, Monday is a holiday. It's President's Day here in the U.S. The markets are generally closed. The futures are open till noon Central, 1 Eastern. If you're a Stage 5 member, we'll have someone at the desk until noon. If you're not, then it's not such a great day to trade anyway. But just so you know, it is a holiday. Tuesday, Wednesday, I will not be here. I will be absent, and I'll be back on Thursday, so you're aware. A reminder will be sent out over Twitter. What did we do yesterday? So the expectation yesterday, let's go to the 15-minute first. The expectation yesterday was for, the primary expectation is for responsive buying. We're looking for 31 and 33, not very good at drawing things here, 31 and 33 to be the initial cap. Those levels came from the overnight profile. And then the main cap and really the large opportunity, the better short opportunity yesterday is in the 45 area. But in either case, we were looking for responsive buying into the prior balance, and then the expectation is for it to turn over and then start moving down to 1810.75. 1810.75 being this key high volume node here, a key acceptance area from the recent past. And so that's what we're looking for. Yesterday, it did not quite push. I'll show you really briefly because I got asked about that level a couple of times where that 31 came from, 31 to 33. And if we go back to yesterday's overnight session, you can see right where the cutoff is, where the sell-off happened. So we opened yesterday and we ended up with this pattern here in the Asian session, and then we broke that pattern fairly aggressively for the overnight session. You can see the delta is very strong, and that created a smaller upward distribution and a large lower distribution, and the market basically at the low, hung out at the low until the cash open. So this is how things looked when we came in, when we finished with the trader bite. And so as much as we expected the responsive buying, and by the way, this is a perfect example of an impulsive pullback, continuation, and then corrective. And the corrective was the responsive buying. That's part of what drove that hypothesis, that primary hypothesis. Was the corrective side of things. Corrective was responsive buying up to 31 and 33. You could see here 33 is the top of the LVN zone, and the expectation is it would present resistance at least on the first touch. And then what ended up happening there is it actually held the buying completely in the morning. It just stopped it in its tracks, and the next rotation down on the 15-minute was 26 points. 26 points, pretty big rotation. That's basically a whole day's second deviation, or first standard deviation of range recently. And then we had the pullback, and then a continuation move here down to 1805. But what happened yesterday also is we did not take out the overnight high or the overnight low stat. We ended up with a very balanced profile despite the battle, despite that false news or whatever it is on OPEC, that ended up driving the market in the afternoon. You could see that the expected volume down here at the bottom pane, the expected volume is supposed to be fairly muted for that time of day, but the actual volume, the expected volume, meaning the 20-day median volume, versus the actual volume for that 15-minute time slot was really ridiculous. Multiple times the volume, multiple times the range. So we ended up going neutral on the day, not neutral extreme, neutral normal. We broke the IB low. We tested lower to complete this impulsive move down, so that's good. And then we had this big move up on the news, and the market just hovered up there. So overall, a pretty pretty interesting session. Very technical in nature, but what we walk away from with this session is that we had a balanced profile, a very valid value area because of the balance. We have tested that 1810.75, and we were not able to push through and maintain and create a high volume node down here. That's a big deal. You could see that as we push into 1810.75, we have a high volume node, and then we get a good taper. In other words, as prices auctioned lower, as it was offered, there was less and less participation at lower prices. And in both instances, or in multiple instances, when we did get into that 1810, you can see that we left tails behind, small tails behind. The buyers were motivated. And you can see that on the tape, actually, or if you have S5 Bookmap or whatever order flow software you use, you could see it. That there was a lot of iceberg activity in that area and a lot of participation on the bid side, on the buy side. And then we have this catapulting action into neutral for the day and finishing in the middle with a very substantial point of control against this high volume node in this area. This high volume node carries all the way down to 1719. As I said yesterday, I went over how these nodes work, but the big major low volume node in this area is in the 1745 region. That would be the next huge target below if we start to walk our way back into the 1800s. Okay, so that's how things shaped up. The prior 3 days, we had a gap down, so we gapped down on this day here, and then we basically went into balance in a kind of an island type of setup where we tried to push in push back into the prior MC, the micro composite, but these 3 days form this balance zone. And the point of control of this balance zone is, lo and behold, 1848, the high of the session, 1848.50. The gap close is 1847. Lots going on here. We have a gap zone that we left behind yesterday. That gap zone's from 1834.75 all the way up to 43.50. We're in the middle of it. The market is holding a fairly bullish sentiment as it stands right now. So, with all those factors, and let's take a quick peek at the overnight session to incorporate that history into the analysis. If you look at what's happened since the Globex session started, essentially just riding higher all the way from the open. It did retest back down a little bit, but overall it just continued higher. A very poor high on the overnight session. Meh low. We do have an excess low. There's no taper here, but we do have an excess low. The high is very poor as it stands right now. I'm expecting continuation in that direction, and I'm expecting it to regain to maintain its posture by holding the MC. In walking through yesterday's action, I want to, so IRT, the software that I'm using here, the charting package that I use, they're working on releasing a feature that allows me to walk through and show you how things developed throughout the day. That feature is somewhat available right now, so you can create a profile to the visible point. But it needs to be adjusted. And I just wanted to show you real quick how this auction proceeded yesterday as the market opened. So as I walk through here, you can see the narrative of what happens. So here's how we identify the opening swing. We look for where buyers stepped in on the open, where sellers stepped in on the open. That becomes the opening swing. That's why you always see these dashed cyan lines on my chart. That tells me where the very first high and the low from the open of the session occurred. And so you'll watch and see how these lines work. So we have the initial opening swing, and we don't have confirmation yet. We don't know if that's a valid opening swing yet or not. But then as the session continues, you'll notice that it becomes a bit of a balance point, and we'll start to play around with these lines. There are also some statistics associated with that opening swing metric. So as the session moves along, you can see right here we finally get that confirmation almost an hour into the session, and we move along. And we see that it's a constant battle in that area throughout the session. So that tells us, the opening swing also tells us that as we cross the opening swing multiple times, it tells us the market's in balance. And then once we get back in, we generally test the other side with a fairly decent probability. But yesterday had some really good. Later in the session, I got myself into a little bit of trouble early on. Just a couple trades that didn't work. But later in the session, just really beautiful setups on the short side. Just an excellent rotation up into the mid here, the mid being this blue line. And overall, the market holding its auction very well yesterday. So we got a decent rotation down here, 6.5 points, and it ended up pushing through. And then you can see that the mid starts creating trouble as it converges with the point of control, mid, VWAP. We're in the middle of the opening swing. We're around the opening price. There's a lot going on in this area, and unfortunately we had to deal with that strong spike in oil that kind of messed things up. But overall, this whole week has been very, very jittery which is actually a market that I like. I like the volatility. I like to see that the auction, when the market's jittery, the auction is much truer to itself, and that's the point I wanted to drive. So, in in summary here, over to today's action, the expectation for today, the hypo one, we are pushing into this micro composite balance zone, this 3-day zone here. We are pushing right into that, and we're up against the point of control. I expect the expectation this morning is I would have to look at responsive first, but here's the catch. The catch is that depending on which side it tests first, I'm looking for the hold on that in that direction. In other words, if we open and we get a push down, the first large rotation is downwards, then I'm looking for support and I'm looking for it to turn and go the other way. If we open and we immediately take out the overnight high and attempt to push and it starts to turn down, then chances are it's likely to push down into that 1825 area for the value high, and then potentially 1819 for the point of control. So because we are pushing into balance, what I'm expecting is an attempt early on in one direction, and then I'm looking for an outside-in type of market, as opposed to a market that opens and then just takes off. That is still a possibility, but remember, we're moving into this balance zone. So today, given that it's a Friday, given that Monday's a holiday, and given that we are pushing back into the most recent balance zone, you want to start watching these really key areas, 45 to 48. And if we cannot maintain prices up here, we start to drift down and into yesterday's profile, then we're likely to test the entire value area from yesterday back down to where? Back down to 18.1075, which is basically value low. 1150 is value low, 1075 is just 3 ticks behind it. So if we push in this morning, chop around, and then start moving out again, or we're not able to hold yesterday's range, then I would be looking for 1848, the overnight high, to be broken, and I'll be looking for it to get back up in here into the MC point of control and chop around into the holiday afternoon. But the better opportunity is it tests the overnight high, it fails, and comes back into the range. That gives us a target of 25.75, 18.19, and 18.10.75 below. That's the so we start building a micro composite down lower, and the market is accepting lower prices as fair. That's how things are shaping up. It's kind of a combined hypothesis, but it's the best I can do because we're moving back into the balance range that we were in earlier this week. I hope I'm not confusing you with all that. And I also hope that you've learned something. Again, I will not be here Monday, Tuesday, or Wednesday, but you will be able to watch the trade wisdom videos and so forth. They'll be posted at this time. Good luck, and I'll catch you later. Take care.